Hello, Ken here. I just want to quickly go through a short 15, maybe 20 minutes presentation here on how to grow your wealth tax efficiently. And so let me just share my screen here and we can get started. Okay, so give me a minute, I'll share my screen now and we can get started here. All right, so hopefully you can see my screen there. Okay, so how to build a tax efficient financial plan for your future. So that's going to be the topic of my conversation today. And quickly, I'll share my story. I'll tell you what a tax efficient financial plan is. I will go through the foundation that you need to know, go through some of the key building blocks, and provide you a framework for building tax efficient wealth. Then I'll share some resources for you and my contact information in case you want to get a hold of me. So I am Ken Green. I immigrated to Saskatoon from Nigeria back in 2002. I did my MBA at Schulich, worked for PricewaterhouseCoopers, one of the 4 major accounting firms in the world, for about 4 years. After that, I left and worked in a few Canadian banks from 2010 to 2016, started my accounting practice part-time in 2010, and co-founded with a partner in 2012. I transitioned full-time to the business in 2016. In 2020, I wrote a book, Tax Efficient Wealth, and I'm also the creator of the membership group that you find in taxefficientwealth.ca. So what is a tax efficient financial plan? I define this as an intentional financial plan designed to minimize or eliminate taxes. An efficient tax plan seeks to do 3 things. 1, to save money tax-free. A good example of this is RRSPs, and that's the Registered Retirement Savings Plans in Canada. The second goal is to grow your money tax free or maybe tax efficiently. And you can do that with the TFSAs. So TFSAs is the tax-free savings account in Canada. You can also do that with tax-exempt life insurance. And finally, the goal also is to distribute your money tax-free. And you can do that by taking things like policy loan, equity in your property by of course, drawing from your TFSA account. So those are the 3 main goals that we seek to accomplish with the tax efficient plan. So now I want to quickly go through the foundation. What are the key things that you need to know in order to implement this plan? The first thing I want to talk about is developing the right money mindset. I think this is very important. And when it comes to money mindset, some people will ask, what is that? It is your unique or individual set of core beliefs about money. It is how money works in the world, or your understanding of how money works in the world. It is your overriding attitude about money. It shapes what you believe you can do and what you cannot do with money, how much you can spend or should spend, the way you utilize debt, how much money you give away, your ability to invest with confidence and success. So that is what money mindset is. And when it comes to money mindsets, there are generally 2 extremes, right? So you either have the scarcity mindset, which will keep you stressed, anxious, and in some ways can result in a lack of generosity, or maybe you have the abundance mindset that can keep you calm, positive, optimistic, and a little bit more generous with your money. Most of us, we fall somewhere in between these 2 extremes. The good news is that you can change your money mindset. And when you do that, you will get your money right. You will have the right motivation to achieve success and the right money mindset to give you the freedom from worry and to give you the financial freedom that you desire. And what I recommend is to consider ways you can change your money mindset. And one of the ways you can do that is by asking yourself some deep questions. For example, what comes to mind when you think about money? What significant money wins or growth have you experienced over the last, say, maybe 10 years? Then you begin to look for ways to reframe your approach to spending, particularly if you suffer from what I call a lifestyle creep, where your spending is always rising to match your rising income. Later, I'm going to share a resource with you where you can take a 2-minute money mindset test to give you a sense of your current money mindset. And I encourage you to take it and start looking for ways to begin to work and improve your money mindset. Secondly, I think it's important for us to have a basic understanding of how our Canadian tax system works and what it takes to build tax-efficient wealth in this country. If you ask the average person, why is it that you don't know anything about taxes? Well, they'll say they can't afford to hire someone to teach them. They don't have the time to learn. But if you ask the same people if they're excited to get a 1% or 2% or 3% raise, they'll say yes. Right? What they fail to realize is that spending time to understand and plan their affairs can get them as much as 2 times, 3 times, sometimes 10 times what they're getting in annual salary increases. So it's critically important to know the basics so that you can use them to your advantage. And I'm just going to go through a few of them. So one is the marginal tax rate. If you live in Canada, you know we have a marginal tax rate system. The more you make, the more taxes you pay. Knowing this will allow you to manage your tax brackets so that you can optimize your taxes. Not all income are taxed alike. So different types of income attract different tax rates. For example, capital gains are taxed lower than ordinary income. So you can plan to earn more capital gains to pay lower taxes. So very important to understand the different types of income and the rates that they attract. A lot of people get confused between tax deductions and tax credits. So it's important to understand this. Our income tax is based on your taxable income, not your total income. So you take deductions to reduce your taxable income, while credits are there to reduce the amount of taxes you owe. It's important to know which deductions and credits are available to you, so you ensure that you're using all of them. A lot of people also get confused about the difference between tax deferred and tax free. Tax deferred means you're going to pay the tax liability at a future date. A good example is the RRSP. When you withdraw from this account, you pay the taxes then. Tax-free means you don't owe any tax liability. And a good example is the TFSA, because you don't pay taxes on the earnings in that account. The other thing I want to talk about is the 3 powerful wealth accelerators. And I want you guys to pay attention to this because these are some of the tools or things you need to use as you build your wealth. You all probably know what compound interest is. It is the principle by which interest you earn by which the interest you earn also earns interest. It is often referred to as the 8th wonder of the world. So it's important you learn how to use it and use it to your advantage. The other one I want to talk about is leverage. Leverage, I know, is a buzzword. It is often correlated with high risk, which makes sense because if you use it poorly, it can result in an unmanageable debt level. However, when you use it wisely, leverage can be an awesome thing. In fact, accumulating wealth will be more challenging without leverage. So this is why almost all millionaires and billionaires achieved wealth by employing some form of leverage. And finally, I want to talk about velocity. This is one that most people are unfamiliar with when it comes to personal finance. Simply put, it is a concept that allows you to always keep your money in motion. In other words, you're investing and reinvesting the proceeds from your investments, and you're doing so at great speed. So by using velocity, you can compound your money faster and you can accelerate the pace of wealth accumulation. And finally, I think it's super important to understand the 4 key financial obstacles that stand in the way. The first one I'm going to talk about is taxes. Most Canadians think housing is the biggest cost. Unfortunately, they are wrong. You likely know the stats. The average family's total tax bill is approximately 44%. This is double the amount they are paying on housing costs each year. The reason this rate is so high is because of all the additional taxes we pay in our everyday purchases. In addition to the tax we pay on our income, we pay payroll taxes. There is sales tax, property tax, carbon tax, health tax, alcohol tax. There are taxes everywhere. And the sad news is that most people don't pay attention. And one of the reasons for this is because we pay these taxes upfront in form of withholdings. So no wonder someone will gross maybe 100 grand per year and they still wonder, where is all my money? No wonder many Canadians today live from paycheck to paycheck. No wonder most people never achieve financial independence. And so it is important for you to understand taxes and to understand the impact of taxes. So tax is a major obstacle. The second one I want to talk about is non-deductible interest. With the rising cost of homes, our biggest asset is often our primary residence, particularly for those that own their homes. And that comes with a big mortgage. So next to taxes is the high mortgage payments that we make on our homes is a big cash drain. But more importantly, is a big issue because the interest is not deductible for tax purposes. So when you add taxes to the mortgage payments that we make, it's easy to see why no cash is left over for most Canadians to invest. For those that may not know, our mortgage payment consists of 2 components, the principal and the interest. Right? And so if you take your mortgage statement and you look at it, you'll see that the interest component is really, really high. And our tax rules will not allow us to deduct the interest. As a result, from a tax perspective, this is a big burden. The fact that you cannot deduct your biggest interest cost is a huge obstacle, and this will prevent you from achieving your financial goals. And in addition to this, most Canadians have consumer debt with interest cost that is also not deductible for tax purposes. So it is critical that you look for ways to minimize the impact of this as part of your planning. And 2 quick strategies you can implement today are: 1, you look for ways to convert that non-deductible interest on your home to deductible interest as quickly as possible. And secondly, you can rent a portion of your home. And if you do that, you can write off some of this interest. The third point I want to talk about is the cash flow crunch that we all experience. So this happens obviously when our household spending is rising to match our income, what I referred to earlier as the lifestyle inflation. And so this is a trap we all fall into. It's easy to get caught up in lifestyle inflation. Lifestyle inflation is a huge problem in this country because we end up spending all our money. And if you're spending all the extra money you're making, it's nearly impossible to save. If you can't save, you cannot invest. If you can't invest, there's really no way you can get ahead financially. And it's one reason why many Canadians live from paycheck to paycheck. So for the average Canadian employee, we know that taxes are taken upfront through payroll withholding. And this happens before we even see our money, right? And with the funds that are left, we use this money to now pay expenses, the majority of which are not deductible for tax purposes. So things like our mortgage payment, our car payments, childcare expenses, gas, food, clothing, all the things we spend money on. So it is critical to look for ways to reverse engineer our cash flow pattern by considering how we can renegotiate our benefits, how we can lower our source deductions, how we can start a side business so that we can start shifting some of these after-tax dollars to before-tax dollars. So there are a couple of things you can do to begin to improve your cash flow. And lastly, I want to talk about inflation. Inflation is a big obstacle, particularly with the amount of money printing we're seeing with governments, not just in Canada, but all over the world. If you drive, you know the price of gas has escalated recently. And so that's inflation. There's inflation everywhere, right? Inflation is the rate at which the general level of prices for goods and services are increasing over time. So this is what I refer to as a silent killer. The reason is because we don't see it. Oftentimes we don't notice, and it appears somewhat insignificant. But I encourage you not to underestimate the impact of inflation, because it impacts our ability to grow our wealth and impacts your ability to achieve financial freedom. Right. So it's always important to have that at the back of your mind to make sure that inflation is not robbing you of your wealth, of your future, and just to make sure that it is not impacting your purchasing power. Okay. So now, what are some of the key building blocks that we need to know about? Right. So first, I want to take a look at ways you can make money, because it starts with making money. So today, you may have a job that you're earning salaries. It is a great way that most Canadians make money. You can now start to look for other ways to make more income. And once you make that income, you begin to look for ways to multiply your money by investing it wisely. And then you want to now look for ways to protect your money, because at the end of the day, it's not how much you make that counts, it's how much you keep. So use things like insurance and other means to protect your money. Then secondly, you have to start learning how to build assets that generate cash flow and income. And finally, I want to talk about briefly the 10 ideal characteristics I look for in investment vehicle that I want to use to grow wealth. So these criteria, they include things like tax efficiency, safety, growth, leverage. Later, I'm going to share a resource where I go a little bit in some level of detail into these areas. So finally, let me share a framework that you can use to build wealth. And this is a framework I call CASTA. So you start by setting your goals, you assess your current situation, you look at structures and different structures you can use to earn income or distribute money. You look at the tax efficient tools you can incorporate, and then once you have all of those things done, you go into action and you're continuously reviewing what you're doing. So the first step is goals. So here I encourage you to dream big, to come up with a clear vision, to define both your long-term and short-term goals, because without this, it's going to be hard for you to know where you're going. So this is this gives you a roadmap sort of where you begin to plan and begin to, at least you have something you're working towards. And the second step, you want to assess your current situation. I talk about gap here, meaning the difference between your income and expenses. So you really want to make sure you're looking at how much you're making, to make sure you're increasing that over time. You're looking at your expenses to make sure you're reducing your expenses so you have enough to save and invest. You're looking at your debt to make sure that you have productive debt and not consumer debt. You're looking at your assets to make sure that those assets are efficient. You're looking at insurance to determine that you have enough financial defense, and you're making sure that you're using all the tools that we have in our tax system to generate wealth in a tax efficient way. The third step is looking at the structure, right? You want to optimize the structure you're using to earn income. Obviously, if you're earning income personally, it's going to be taxed differently compared to a corporation. And so you want to consider the best structure to use. What you realize is that the structure you use will determine, can ultimately improve your cash flow, can help you defer taxes, and obviously will help you minimize or sometimes eliminate risk. The fourth step, you're looking at tax efficiencies. Again, the goal here is to save money tax-free, grow that money tax-free, and to withdraw it tax-free. And here you're looking to leverage, to compound, to use velocity and all those tax efficient tools I mentioned earlier. In the fifth step, we're going into action. So this is where you're distilling all your long-term goals into actionable steps. There is a great quote by Abu Bakr where he says, without knowledge, action is useless, and knowledge without action is futile. So sometimes you need to get into action. You have to first figure out what is stopping you from taking actions, right? So is it distraction? Is it lack of a structure or system? Is it a lack of accountability? And so once you start looking at all these things, you begin to develop winning habits, and then you begin to build accountability that will allow you to achieve the results that you want. And in the final step, we're going to review. You're constantly reviewing. It may be daily, weekly, monthly, and making sure you're learning from your experiences, you're making changes, and you're refining and repeating what works. So this is the step in summary. And so the first, you start by defining your goals. You assess your current situation and determine what I call the gap. And the third step, you're reviewing and putting things in the appropriate structure to make sure you're earning income properly, you're managing your wealth correctly. In the fourth step, you're building tax efficiencies around your finances. In the fifth step, you're going into action by building habits, by incorporating accountability and taking actions to implement all the wealth building strategies. And finally, you're always reviewing so that you can learn, refine, and repeat. So I can help you. I have a personal coaching service program where I help you focus, help you go into action, and to make sure that you're getting the transformation that you need to get the change that you want. And I'm going to have the link at the end of this video. I mentioned resources earlier. So here is the book that I wrote where I went into a little bit of details on some of the topics I talked about today. Again, I'm going to include the link below this video for you to look at. I also want to share some good resources with you, how to make 2022 your best year ever. There's going to be a link for that. I mentioned the money mindset survey here, and you're going to take that. And here, there's the link to this video where I went into a little bit of detail, explaining what those top 10 characteristics are. And finally, not finally, but here I have a report on the top 10 reasons why you pay too much in taxes. I'm also going to share a link with you where you can join my weekly newsletter and my articles that arrive from time to time on Medium. Okay, if you need to get a hold of me, again, I'm providing my email here, my phone number. Feel free to reach me. And until next time, I'll talk to you soon. Okay, bye.